About to tell you something that every trading guru out there hopes you never figure out. Most trading courses are designed to keep you dependent. They sell you signals so you keep paying every month, or they teach you one specific strategy so when it stops working, you have to come back and buy the next thing. This is different. It's a complete picture. Everything you need to know to trade for yourself for the rest of your life without ever needing anyone else again. And honestly, it probably doesn't make business sense for you to sell this because once you have it, you might not need us anymore. But that's kind of the point. Let me tell you a story. A few years ago, something happened that changed it. It's a complete picture. Everything you need to know to trade GameStop, AMC, the whole meme stock era. I watched an entire generation discover the stock market for the first time. And right behind them came a bunch of vultures. Suddenly, everyone with a social media account was a professional trader. Influencers who had never traded in their lives were selling courses. Telegram groups were popping up everywhere, charging monthly fees for alerts. Discord servers full of people copying trades from someone who got lucky once and called themselves an expert. And it worked for a while because the market only went up. Everyone looked like a genius, but none of them were really teaching anything, at least nothing real. And they were just riding a wave and taking your money all the way. People were sold a lie that you could just follow someone's picks, copy their trades, and get rich. That you didn't need to understand why things were happening, just what to do. And when the wave crashed, those Telegram groups, they all went quiet. And I started getting approached by other groups, big groups with hundreds of thousands of followers. They'd say, hey, can you send us your trades? We'll pay you. And quite frankly, for a while, I did it. I let them outsource their entire service to me. Their members thought they were getting trades from the group's experts, but it was me the whole time. And I'm not proud of it, but it showed me something important. Most people selling trading education don't actually know how to trade. They know how to market. They know how to build an audience. But when it comes to actually making money in the markets, they're paying someone like me to do it for them. And that's when I realized the real problem isn't that good education doesn't exist. It's that most people can't tell the difference between real and fake. And by the time they figure it out, they've already spent thousands of dollars. So here's what I built, and I call it the apprenticeship. Think of it this way. Most programs out there teach you how to make one, call it a dish. Follow this recipe and you get this result. But the apprenticeship, this is culinary school. It's learning to become a chef who can create any dish that they want. By the time you finish, you won't have my system, you'll have your system built around your schedule, your strengths, your risk tolerance, and the kind of trading that actually fits your life. Here's what makes it different. It's complete. We start from the very beginning and take you all the way to trading professionally. Scalping, day trading, swing trading, investing, every style of trading, every asset class, stocks, options, futures, crypto, even Forex. If you can chart it, you can trade it. It's perspective. This is not theory. This isn't, well, it depends, or only in these situations. Every strategy we teach is like a doctor's prescription. Do this in this situation every time, because we've tested everything across all market conditions. We only teach what always works, and we teach it in the right order. Most people's trading foundations are crooked. They learn things out of order, picked up bad habits, have gaps they didn't even know existed, but we fix all that, brick by brick, in the exact sequence it needs to be learned. Here's what I see every single day. I open up our community and people are posting their wins. Not because I asked them to, not because I pay them, they're just excited. $20,000 in a day, $100,000 account built from basically nothing, 1,600% return on a single trade. And it's not just one person having a lucky week. It's hundreds of people consistently over years. When I trade, you see everything. Every entry, every exit, updated profit percent, nothing is hidden. And you can scroll back through years of this, 2025, 2024, 2023. The numbers don't change. Here's what over 1,500 trades look like. Win almost 80% of the time. When you win, you more than double your money. When you lose about a third. That's what's true. So 8 out of 10 trades, you're doubling up. The other 2, you're only giving back a small piece anyways. That math works. And that's the skill set that you're going to build. This isn't about hitting one lucky trade. This is about doing this over and over and over and over again. That is what we teach. So here's what you get when you join the apprenticeship. It's a complete curriculum. This is everything that you need. Financial freedom for anyone who wants it. The ability to know you have a real skill set, that you can go to the market and create opportunities whenever you want. That's what this is really about. If that resonates with you, you're ready to stop guessing, stop following signals, stop hoping, and actually learn how to do this for yourself. Then click the button below and let's get started. The door is open. Let's make sure that you never get left holding the bag again, because you'll never need anyone else. We made it. What is up? I've recorded that like 2 minutes ago. No, I'm joking. But what's up, guys? It was a long one. But that's the apprenticeship. We've been talking about it forever. Just figured we'd play that because it is live and it is ready to roll. So if you haven't yet, there'll be a link in the description if it's not already. Book a call. The first 7 courses of that thing is free as long as you talk to us. But yeah, it is probably the best and biggest release that we've ever done. It is not a small feat, and it is massive. It is not a class. It is like a full-blown curriculum. But anyways, what a week already. And I think we're like 2 hours in. I'm like, it's like we've moved the length of an average. It's crazy out there. How many people opened up and you're like, oh my God, this is going to be bad. I mean, I think it was Sunday futures was the absolute worst look. And then even this morning, it was just like, whoa, intense. Where do we sign up? It is, again, in the description for sure. Where do you sign up? It is, I'll get it out again, but it's just go to papergains.com is the website. And all the links are there. But yeah, I'm not a great marketing person, but thankfully I have some people that we can put some cool stuff together. But yeah, it's been a wild year for sure. Let me see if I can get you this link. Link is schoolofgains.com/LP. There it is. Boom. If you're interested, links in the chat. But if you're new to the show, all good. Don't worry about it right now. And today and every Monday, what we do is we kind of go through the market and say what's happening, what happened, and what do we have to look forward to this week. But if you're not looking at the market, I mean, this is it. This is the headline of the day, of the week, of whatever. Thank you, Daniel. It is in the description. But yeah, I mean, Strait of Hormuz is closed. And that is why we're seeing a lot of things happen right now. I think really in the pre-market, it was a huge move on natural gas. I have Oxy. A lot of that's pulled back, if not all of that has since pulled back. I think the biggest thing right now is that, you know, the way this is going to play out is going to determine how the market kind of sees it. I think the rhetoric so far is that it's going to be one and done, and hopefully pretty quick and dirty. But well, quick and dirty is just hopefully quickly. So if that's the idea, then I think that is kind of what the market's looking forward to. Also, you know, we haven't had like a real, this is not World War III yet, I don't think, or anything like that. But like, we haven't had a real major conflict, net new conflict for a while. And I think a lot of market participants are kind of like, what's the word? Like, have normalized to like, oh, okay, gold or like war headlines immediately kind of inverse and immediately buy the dip. So this one, I don't know. I just don't know. It's pretty intense out there. So I think things are still unfolding, and I haven't been on the news for the last couple hours. So things are evolving very quickly. And the other thing is, like, Well, at least the saving grace here is that February is over. So yeah, February is over. February tends to be like the second worst month of the year. And we do seasonally usually see some kind of a bounce in March. I think the difference this year, being a midterm election year, is that it's not just about March, April. There's usually, and then April I think kind of fades away. There's usually a decent rally into July, and seasonally I think that's the biggest difference from a midterm year and not. So I think this March bounce is good. We'll see. We got a lot of stuff coming up this week, man. Like a lot of stuff. So if you're new again, make sure you subscribe to the channel, like the video. What we're going to do right now is kind of go through what are the main headlines that hit over the weekend and last week, and then what do we have to look forward to moving forward for the week. And we'll kind of prepare a bit of a trade plan, at least from a general directional perspective, and see where we go from there. But I mean, that's the big headline. I think it was Saturday morning for us, like 1 a.m. kind of thing. U.S. attacks Iran, and now Qatar has stopped producing liquid natural gas, LNG. And that's why it's not just oil, but it's all of those products. LNG specifically, I mean, that makes sense, right? Like I'm not going to be, you're not going to be shipping containers that are potentially at risk of being attacked like that. That would be, I mean, of course they're going to stop producing LNG. What's weird though is that you kind of saw all of this in the charts beforehand and leading up to it, because oil was a big long, energy was a big long. Even the flight to quality trades have been a big long, way stronger than the old tech regime. And it was kind of like it was already in the charts if you knew how to read the charts, I guess. Which is weird how these things always happen. And then immediately out of the gate, a lot of this stuff starts reversing. I haven't seen, I can see oil and things like that. Northrop Grumman, NOC was the strongest ticker out of the gate also, and the biggest impact from a market cap perspective, still hanging in there. And then ConocoPhillips, ticker COP, also was one of the stronger ones, holding, but not, I mean, these guys look like they're going to fill the gaps almost entirely, like Chevron out of the gate. And I'm looking at another screen right now. VG, who had earnings, is a natural gas play, actually looking pretty strong. I think there's some other news that came out in conjunction with this headline over the weekend as well. So there is a lot of stuff going on. My body starts to produce LNG. Oh my God, you guys are hilarious. And so I guess why is crypto pumping? This is all like an inflation trade also. So look at the dollar, the DXY is the US dollar index. It is the debasement trade that still works. There's, like I said, there's a lot of stuff that's been in the charts for a long time, and I think we'll still continue to see this. And, I'm not personally sure. Someone posted in the comments last week on the video, it was like, could have titled the video bearish to neutral last week. And I'm like, yep, that kind of sums it up. So kudos to whoever posted that. But I kind of feel the same way. So today is Monday, and we're going to go through a little bit more, but the flight to quality stuff is still there. We just opened up significantly extended. Today is like the beginning day of the week. And as some of you guys have said, like non-farm payrolls on Friday, we have a ton of stuff heading our way. But before we get there, this is the recap, right? So last week on Friday, we also got PPI. Before that, we had gotten CPI, headline inflation. We got a preliminary GDP number that did not include like the full look. So I think the preliminary GDP numbers just decisively off. I think it came in at 1.4, and there was an expectation of like 3 something, which is literally half. But the government being shut down, it was basically half the reading. But CPI came in exceedingly hot as well. So we'll see what GDP looks like. CPI was hot, which is inflation. And then PPI we got on Friday, which is the producer's price index. Basically like large scale manufacturers, things like that. Their inflation in parentheses here, this is what the consensus number is. And when I say consensus, that is what the market is pricing in at that point in time. And so if the only thing that moves markets, or what moves markets rather, is a deviation from what's priced in, or the consensus number, and the actual number. I usually put prior just for a comparison, but that's not really important. The thing that's important is the difference between, in my screen, the parentheses or the consensus number and the actual number here. So PPI month over month coming in really hot. When you strip out food and energy, it was even hotter. So they call that core PPI, Producers Price Index. And so this is more of a leading indicator, and it usually does eventually move markets, maybe not on that day, but it does set a bit of a tone as well. But the idea here is that, well, if the manufacturers, which is who this is for, if the manufacturers are experiencing elevated levels of inflation, do they then pass it down to the consumer, which leads into stickier inflation continued, or maybe even higher inflation? And I think that right there is the other nuanced underlying in the market. And it's an odd one, right? And then if we do get a muted GDP, which we don't know, we'll see. But from this is the wrong screen. Where is it? I had a weird one. So sorry for this, is kind of a mess right now, but this is the current view of what the market is currently pricing in. Over on the right, let's just make it blue. This is last week's screenshot. And the biggest difference comes in, we'll do orange, right here. So for 2027, way down here, that's actually what's changed. And as well as this number right here. So before last week, they had priced out a rate cut in June. So they were saying it's not going to happen until July. But this week, after whatever we're seeing, probably a GDP reference. Again, I just don't think that GDP number was accurate because of the government shutdown. I could be wrong, but I just really don't think so. They're putting it back this week. So this is this week here. And so moving from 38 before to 53 now. That's the biggest difference in what the market is currently pricing at. So this is for the rate cuts. And instead of having, and now we've got a little bit extra bump in 2027, which is post J Powell. So we'll see how long this lasts, but this year we're seeing that in the index level, everything we kind of talked about in terms of like everyone is accustomed to kind of fading a war dip or the conflict rally, if you will, for oil and selling the news from an oil and defense perspective, buying the dip on equities. That's exactly what we're seeing right now. Does it hold though? TBD. Quick check on seasonality. This is where we are. So so the good news is that February is over. So we have January, February, March. We are here. So maybe we get a little bounce. This is a midterm election year. So in the presidential cycle, what we usually see is 1, 2, 3, 4-year cycle. This is honestly, this is how stocks operate. If you didn't know, but they move in 4-year cycles. The biggest dip to buy in this midterm election year is the September dip, but into March, April, we do tend to get a little bit of a rally. I think the strength of this rally, we'll see. There's a lot of stuff going on. By the way, this is general seasonals. This is a total generalization. It's not like this is what's going to happen, but it is what the market sentiment typically has right now. So I think this is going to get locked in next week after non-farm payrolls. Also, by the way, I did not do this. I did not put this in the, in the description. But because it is Friday, I just dropped this link in the chat. I have not put it anywhere else. I will start doing that, but this is a limited availability. I think we cap at like 200 is per my seat count that I have. But click this link. We're going to do a webinar on the NFP trading system. So it's free. We're going to go through the whole system. Make sure you register it. I talk about this thing all the time, but it is essentially, why this works, how we kind of came up with it, what's the nuances behind it, and how to really read it. So yes, we do have an indicator on that stuff as well for TradingView, which again, if you show up to this webinar, then we will hook you up on that. But again, this is a proven system, probably the best statistics in the market that I've ever seen from a trading perspective. I think this has over the last 200 something years, back test, forward test, 88% probability of being within 1% accurate, which you're just never going to find a better statistic than that in terms of an actual trading system. But this is both for day traders and for swing traders. And position traders. So day traders, scalpers, yep, they work. It works with this. Swing traders, position traders, absolutely works with this. And investors can probably get a little help on this as well. But again, this is a free webinar. Make sure you guys sign up. We're going to cap it, I think 200 seats. And so, yeah, get in while you can. I have not posted this anywhere, so you guys get the first heads up. That's all I'm going to talk about this one. Do you get a replay? No, you got to make it, man. You got to make it. But I might do an encore. Got to make it. But we are here. And so I think the question is, cool, relief rally, a little bit of a relief bounce. I think we can actually see this through the month, but there are a couple levels that we have to see break and hold. And we're going to go through those today. In the meantime, to get there, by the way, if you're an investor of this 4-year cycle, this is what's kind of weird about where we are. If this is the big dip to buy, right? Honestly, anything in this area, if I have a perspective of I'm going to buy something and hold it for at least 3 years, these are investable levels on a lot of things. Can they go lower? Absolutely. And you should actually expect that. And quite frankly, if you're an investor of any flavor, you should probably pray for that. Because if I'm going to hold these for 1, 2, possibly 3 years, this is going to be a blip on the radar. Can this blip on the radar get a lot deeper? Yeah. This can still be, possibly 50% down on some high beta equities. It's still possible, but anything from here, I think because of this is also, it might keep an underlying bid on the market too. But we're going to need some serious headlines for deeper prices to happen, but we have a few months. I'm a little greedy, so I'm not fully positioned here. I'm still looking for some stuff. And I think I could get deeper prices, but regardless, if you're not trying to time the market, any perspective here on a longer term time horizon is going to be money. Just pray for lower prices too if we get it, whether or not we get it. In terms of this week, it's a big deal. In terms of this week, not a whole lot on deck until we get to Friday. So as Connie said, who is now registered, congrats, we'll see you in there. Non-farm payrolls. It's a big, giant pivot. This is the only one. Actually, we got PPI last week. I don't think that PPI was 100% up to date. I know it said January, but I think it was only partial January. This Friday, we're going to get a complete February non-farm payroll look. And so from an NFP perspective, or non-farm payrolls, that's what the acronym is, we are actually up to date on this data point, which is, we haven't been up to date on that in a while. So good to see that's finally there. Hopefully that pulls out some volatility moving forward. But this week, I'll just let you guys know, it's still counter trend bounces. A lot of it. Can they be very tradable and very good? Absolutely, they can, but it's after this week, after Friday, that the real trend starts to show itself. If you didn't know, we are services-led economy, so ISM Services PMI does come out on Wednesday. It's not a red, not a big red, but it does have some impact on the actual market, so that's a big one. We don't really have a whole lot on deck for Tuesday, but I did put this crude oil stock exchange. Like I said, the charts for oil, CVX, Exxon, whatever, they've been screaming long, like big long, for a long time. Even Oxy, believe it or not, and it's almost like somebody knew that this was coming, because it's just so wild to me how this happens every single time. When it immediately goes, it's just like, okay. Somebody knew something. So I don't know if they actually knew something or not, but it's just odd to me how it was just very clearly in the charts already. That said, we'll have another update in terms of, are we stockpiling crude on Tuesday? I think we also have an oil status report on Wednesday as well, but we didn't have a whole lot to talk about for Tuesday. But other than that, quick update on earnings. We are through the top 30 companies in the US. So earnings season is officially completed post Nvidia. So actually, I haven't checked on Nvidia. She was getting hit pretty bad. And then this morning, she looked really good. Oh boy, Nvidia back over 183. That is a massive recovery. Ginormous recovery for Nvidia. Completely counter trend bounce, just so you know. But that's a huge move. I mean, this is crazy. So, I mean, that's going to 185. Then we'll see. But all of the Dow 30 components have officially completed their earnings reports. We're clocking for this last quarter, I mean, one of the best net quarters that I've seen in a very long time. So of the Dow 30 components, which is the largest components in the market, 28 beats, only 2 misses. This has to be one of the best on record reports, quarters, that I've seen in a long time. So it's just a very odd thing, knowing that, hey, we have some seasonal headwinds and we have a lot of headline risk right now. But at the same time, you look at everything going on, it's like, dude, this is one of the best quarters for earnings that we've seen in a long time. And this is the last year. I mean, this is just on this screen alone, the last year. Does not mean that these stocks are going to do good. Absolutely not. Has nothing to do with that. Nvidia got absolutely decimated. I mean, I'll look at this. It goes from 200 in the pre-market to opening this morning at 175. That's down over 13, almost 15% from high to low, down on probably on a very massive quarter, mind you. So just because these guys are beating, and what I'm comparing to is I'm not doing a beat versus the street consensus. I'm doing a beat versus their estimates. It's just massive. And, unfortunately for me, I did have Amazon equity. I do have Amazon equity. I just, they're the ones that actually missed. So great. How Amazon misses in this situation is, I don't know. But that stock has taken a massive tumble post earnings and has not recovered, albeit it has not gone any lower. So 197, I think we saw at the lows of earnings, but sitting here at about just under 210. It was a great looking chart coming in, but this is why technicals aren't really relevant when it comes to earnings. And until you have literally everybody else is great. This is insane. And we do have Broadcom earnings in 2 days. So today is March 2nd, and we will have Broadcom coming out after that. But that's pretty much the biggest one. I think if I look at the actual calendar here, this is it. So this is Wednesday after the close. Broadcom, not technically a Mag 7, but a massive market cap company. Indeed. We do have some retailers here coming out. Target. Best Buy's at the lows. I don't know how I feel about Target, quite frankly. I'll buy some things here and there, but Yeah, I don't know. Some small caps, Space Cruise got ASTS, Rocket Lab already reported. Got a little China. ANF. Yeah, that one. I mean, that one's done pretty well. That's Sydney Sweeney, right? she got to ring the bell. Costco, my Marvell. Yeah, so retail, ANF, Gap. Those are like closed. We got one more massive software company here. These are componentries. This is another super high beta. Asana trades in a range like 15 to 19. Doesn't really go anywhere. More retail, retail. Different kind of retail. Software. CrowdStrike's up quite a bit today, I think. Actually, I own a little CrowdStrike. Yeah, I don't know what to say about Archer. This is like, I don't even know if that's what you would categorize this, but this is like story stock. And same with some quantum. Oh, more software, high beta software, more retail. Geez, big retail, more quantum. A grocery. I thought China's stuff had already gone. So Chinese retail. Billy is Chinese like Netflix, I think it is. But yeah, this is the biggest market cap right now. And so we have quantum coming out this week. So D-Wave, Rigetti, IoT, it's all there. A little, so between CrowdStrike and Okta, some security stuff, and a lot of retail. That's it. Still earnings, but the official season has ended. I actually don't have, I was just looking at this. I would normally jump over to my friend right now, Miss Cleo, and I'm just looking at this. I'm like, you know what? I didn't actually do it, but I can actually pull this really quick. So before I jump into the charts, I will be able to get you guys a quick reading. So let's do that really fast. All right. So this is for comedic relief. If you don't like it, look away. But just so you know, we do have a pal of ours. We call her Miss Cleo. She does us a quick reading on the markets. And the way this works is we get a theme card for the week, and then we get one card for every day of the week. And I'm just looking at this. This actually looks really good, I think. Lots of cups. Guys, I'm seeing a lot of gold and silver colors on these cards. That's about as much as I can get from this. But 9 of cups, 4 of wands, the Queen of Pentacles, Page of Cups, King of Cups, and then 8 of Cups. Kind of looks like we might be walking away, though, on that one. I don't really know what to say about that. But this is the way it works. So theme card, 9 of Cups is often called the wish fulfilled card in the market, in market terms. Wish fulfilled. I don't really know. And this is the reason why we do this. It's because of this. It's so funny to me that this is a thing, that TA is male astrology. So we might as well give you legit astrology if you're gonna think that. But that is why. And let's see how the actual astrology turns up, because that's not what I do. But if you want to see what astrology looks like, here it is. So theme card, 9 of Cups, often called the wish fulfilled card in the market terms. It tends to appear when sentiment is already positive and traders feel satisfied with recent gains. Okay, that's a bounce. But it can also represent greed and stinginess, which results in periods of weakness and negativity. So the actual astrologists here are very wishy-washy. It's following the 2 of Pentacles from last week, and that series implies a market that simply continues doing what it has already been doing. Which is what? going sideways. I think this would mean more back and forth with more sell side pressure than buy side. Okay, well there you go. That's bearish to neutral to bearish. Let's see what the daily cards have to say. So today is Monday, the Four of Wands. I call this the homecoming card because it usually touches home before attempting to launch. Home in this case is a major support zone that keeps the downside protected and traders safe. There will be a lot of impulsivity due to the wands of the card, but day traders will love that. So not a swing traders market here yet. It is day traders. If we start off a low, then it's by the dip. I mean, technically we started off of a low, right? And sell buy the dip and sell the rip. Okay. If we start neutral, then it's wait for a dip and then grab that for a ride higher. Got it. On Monday. So if you bought the dip, amazing. Because that's what the situation, I guess, our tarot Miss Cleo has told us. Tuesday is the Queen of Pentacles. Queen of Pentacles is practical, grounded, and focused on maintaining stability. She prefers sustainable progress over dramatic moves, so Tuesday may feel methodical rather than explosive. All right, this means chop is likely, and I expect it has a buy-side support to prevent any major decline. I wouldn't chase or expect trend, but I wouldn't fade it either. I just step away. Wednesday, a Page of Cups. Pages represent new journeys, but lack the energy to see them through. I think Broadcom's Wednesday, right? Broadcom's Wednesday. This one brings price action resulting from a news announcements, usually pre-market. Okay. There will likely be a gap open, but I'd wait for a retracement before chasing. Trend is likely, though, and you can chase it from that point forward. Thursday, King of Cups. There are lots of cups in the spread this week, suggesting it will be an emotional and mentally exhausting period that may leave you prone to bad decisions. Right? Prone to bad decisions. This card arrives to tell us to chill out and take a pause before acting. He usually shows up when we're struggling with negative price action. I need a reminder to act with discipline and not to capitulate. Don't sell. I don't know. Expect weakness, but things should stabilize near the close or on Friday. Eight of Cups serves as a transition card that brings us into a new phase of our journey. It says that financial goals aren't working out. Oh, that does not sound good. It says that financial goals aren't working out and that maybe it's time to look for fulfillment outside of which. This is a really bad card. I thought it was a good looking card, you guys. I don't know. It does not sound good. As you can imagine, this isn't a great omen. I think you should consider taking profits on. Didn't she just say? So I hate. She just said Thursday, don't capitulate, right? I mean, you go from Thursday, don't capitulate, to, I guess, I think you could now all of a sudden, I think you should consider taking profits on Thursday. Miss Cleo, we're going to have a conversation here. These are mixed signals. Mean reversion with a high chance of trend. You should see a different energy present itself on Friday. This isn't the kind of day where you go chasing, though. There may be a chance to take profits on an overnight trade early in the session. Otherwise, get ready for the weekend. I don't know. The cards this week say that you can expect to be challenged. So a couple days up ski, couple days down ski, not just your trades, but your mentality and your confidence, your strategy. Play small and stay on your toes. The goal is to survive this week. That's it for now. That's all she has said. There you have it. This is it's a Substack for Tarot Trader. That's what it's called. But there you have it. I think that's all she wrote, boys and girls. I can do one thing before I do go into the. You guys said Trump is live right now. If he's live, let me know. But my buddy here, Evan, does do an awesome kind of catalyst watch for the week, so I figured I'd take a look. I forgot to look at this last couple of weeks, but I just want to do a quick scan for catalysts this week. Volatility watch we don't need. Earnings right. We got MongoDB, Department of Justice. Okay, so all week, Department of Justice antitrust trial against Live Nation. All right. Didn't know that was there. And then Morgan Stanley Technology and Media Telecom Conference in San Francisco begins on today. All right. So that's going to have Walmart. What's Walmart doing in a media and telecom conference? That's weird. Cisco, Disney, Comcast, Expedia, Autodesk. Now that's interesting. World Congress Barcelona event begins. SpaceX is going to be there. DraftKings will also host an investor day. All right. So DraftKings investor day today, a lot of other stuff, a lot of big earnings on watch. M&A for tomorrow, BioMarin merging with a company called Fold. Lilly's going to buy somebody out, maybe. It's a vote. And then a 4-day conference in Vegas, widely regarded as premier international event for the sector. What sector? This looks like gaming sector. Once every 3 years. This is Con Expo. What is this Con Expo? Anybody know what that is? Con Expo. I'm just ignorant here. Whatever Con Expo is, I mean, who knows? Wednesday. Gee, I think my chat just stalled. I think we'll be all right. I'll check on my phone. Netflix. This was a big one last week too. Netflix not being in the bid for Warner Brothers. I mean, shareholders absolutely loved that. Last I checked, the stock was actually doing pretty good. Wednesday. Oh. They are, I don't know what they are. It's not Comic-Con, right? They expose con-artists. I don't know. Apple. Apple has an event on Wednesday. See, this is why these things are good to look at. So Apple has an event, in-person Apple Experience sessions in New York, London, Shanghai, part of his coordinated announcement of Whoa. Hello. See, this is why this is not going to be on any calendar. Apple Wednesday is announcing new iPad and Mac products. Did not know that. All right. Yeah, and then this more information on this Netflix deal. I mean, for Netflix, they're going to get paid just to get out of that deal. The market hated that deal. I mean, that's interesting to see what he says, but that'll be a big deal. Could be a big deal. Could push the stock even further, but maybe they talk about some plans they have. China's National People's Congress will hold its annual session. Signals China macro policy direction. There's a ton of macro, you guys. Holy crap. China GDP and policy direction. If you're not familiar with the China trade or how to trade China specifically, it's literally all about the policy direction. It has nothing to do with their earnings of companies. They literally just move on macro policy direction. So that's a big one. I did not foresee this many catalysts happening this week. Friday, 25-1 stock split on Bookings Holdings. That stock probably needed a stock split for sure. UN will release its latest food price index on FDA for new drug application from BMY. So DICTU treats adults with active psoriasis, psoriatic arthritis. That's it. That's a lot of stuff, though. I mean, that's so much for me to even remember, but holy crap. So not only do we have geopolitical stuff, we got China's GDP and policy announcement, we got Apple releasing new products, we got Broadcom earnings. Good night. There is a lot of stuff happening this week. So yeah, maybe the goal is literally just to survive, because holy shmoly. And again, this is we are from a non-farm payrolls perspective. Again, if you look back at the recap, I always look at the consensus. So consensus number here, 60K is what's priced in. So right now, the market is expecting about 60,000 new jobs to have been taken in the month of January. Previous is nice to know. It's not a big deal, but that's what this is. But this number here is what the market will move on. So whatever the actual comes in with, however different it is from what's priced in today, which is 60,000, that's going to move the market. So that's what matters really for the week. In the meantime, not a whole lot. ISM manufacturing PMI we got this morning. Crude stock exchange services on Wednesday plus Broadcom. Yeah, nothing really on Thursday other than our typical labor stuff. That's it. Man, what a week. That is a lot of stuff. That is a lot of stuff to look at. I'm seriously sitting here like, okay, I probably should let's just try to survive right now. But I'm going to take a look at the charts really quick. Fastly, sleeper, by the way. This could be a big one. So I'll put it on the radar. That is a CDN, or content delivery network component, like networking company. Cloud native. It used to be a major high flyer, but I haven't looked at it in a while. I know it's doing really well, but let's see where we are. So what I'm going to do is I'm going to change some things here on my segment so you guys can see this a little bit better, hopefully. And just take a look at where we're coming from. So the red box here, this is resistance, definitively. Green box here, this is, to me, like light support, and we have major support down here in the 670s area. For all intents and purposes, we're really just ping-ponging like a big, giant, like UPC code right now. It's just like going nowhere. This is 3 months so far of sideways actions. What I'll say is right now we are definitively below like the 20 and the 50-day simple moving averages. We are bouncing back up into them. When you guys see this talk on like social media or wherever you see it, if they start mentioning these SMAs, even if we go slightly above like this, that does not mean that we're reclaiming these significant moving averages. By the way, what I mean by that is, let me just take some of these things off, is like the white line and the blue line on my screen. So the blue line is a 50-day simple moving average. I know this is a 30-minute chart, but my moving averages, they're all simple. They're always locked to the daily. They're not going to move on my charts at all, no matter what time frame I'm looking at. And the red line here is the 200-day simple moving average, sitting just around 650 on SPY. I believe it's a little bit lower on Qs, 587 on QQQ. SPY is the most neutral. We've been talking about looking at a couple of things, and we'll review those in a little bit. But this red box, again, definitively resistance. So we are coming up to that. This level explicitly, let me just make it big for you. 689 and change. So that's both the February and I believe December non-farm payroll levels. February here and January. So January non-farm payroll low and high right here. That's resistance. So 689 and a quarter, give or take, heavy resistance. We can retest it, which is what this is, goes up to here. But this zone generally speaking, is currently resistance, and this zone right here is support. So we're pretty pinned at the moment. Let me just take a look at and get a quick measurement for intraday or for the week, average weekly ranges. See if I can see it. I'll have this coded in here so it shows me a little bit better. I think we're good. Well, we've opened considerably lower. So this is the range from the open at 678. An average weekly range to the upside is 691. Average weekly range to the downside, 665 at this point in time. So that's going to be testing that resistance again. So it's a little bit more upside left for an average move. Not a whole lot other than that. Again, we're retesting the 20 and 50 day simple moving averages here. Expect this zone to act as your resistance. But, you know, from a trend perspective, say after this week, if we're able to trade over this, like, dude, it's no problem, right? We're just going higher. But it's weird to see all these things happening in the market, all these headlines and stuff that we're hearing. And honestly, we're only a couple dollars away from all-time highs. I mean, what is that? We are 1.5% off of all-time highs, like $11. I mean, I think we moved 1.5% today, which is wild. Yeah, we moved 1.5% today off the lows. So I think to me, that's kind of the funny thing is that we have not moved at all at the index level. Qs is a different story. So QQQ, and I'll just do it here. I mean, this one's trend is down. So we have, I mean, lower highs, but I say down. It does not look good. It's not fully broken, but it's more at risk than SPY is for sure. So this remains kind of what I would say is the more risky area. So this is tech and stuff like that. This is the prevailing downtrend. We got to get a quite a bit further above to say, hey, look, we're going higher. If we do, that's what it is. If you like this area, it could be catch up. But for me, I'm more in the wait and see kind of section. So I'll just throw on these NFP levels one more time, drop down on time frame, just to get them a little bit cleaner. I mean, we have a ton of resistance literally right here, right at 607. So what I would say is if we can hold over 607 this week, then we should be able to see into this 620 area, which is going to be really constructive. But if we can't hold 607, then we're just back doing what we were doing before. So Qs more so on a big pivot right now. There's a lot of levels here, so no need to like get in the weeds. But it looks like just from one level to level. This was last February's non-farm payroll high, and this was the low. So right now, as long as we hold over this, you could see back up to 617. But that's really it. And then by then we'll have the next NFP number. But this is how non-farm payrolls work. It always acts like this much of a magnet or a tradable range. I mean, very, very tradable for a lot of people. But again, we'll do that webinar later on and show you guys how to read that a little bit better and what it's all about. I'm just going to do a couple more things. I'm going to put this back to SPY and then just do some quick checks. So the dollar index, this one, big bounce right now. We were kind of at the lows here. This is a bearish retracement. So this looks like it's going to be coming back towards that $100 level or mark. It's not dollar. It's like 109. It's just a number, 98 mark on the chart, which again was resistance. We'll find out if it continues to be resistance, but actually not looking horrible right now. It is lower highs and lower lows, but it's trying to retest this area. So it's a tough one. But this is the first chart that's trying to give me a cue on whether or not it actually does break out. So if the dollar does that, I mean, it's going to be tough for gold and silver to hold a bid, even though Miss Cleo had so many gold and silver cards. But for me, a lot of times this first break of what we would call trend line, if you will, this being the trend line here, that is usually one to fade, even if you saw it like down here. So not like today, but if it loses the 200-day, that's probably just going to continue down on trend in the channel and do that. So it's more of a watch. I would not get super bowled up on the dollar here by any means. There's a lot of macro stuff if you want to watch this too. But for me, what's easier in the charts is two tickers. So one is IGV, that's the software sector right now. Is this accurate? Because this morning it was looking at IGV in the chart. So we are at support. This is the software sector at writ large, at major support here, having had a pretty technical drawdown from the highs. So this is measured this low swing. We call swing low to swing high. This is what we would call like a golden zone, if you will. Anything in here is usually a technical retracement that's typically buyable. I like this area here in the low 70s, but didn't quite get there. So far, if we're up and over 82.5 as a sustained bounce, that's actually going to be good for that high beta trade. So IGV is the ticker to watch this week. See if we can sustain a bounce over, let's call it 83. This is going to be constructive for a large counter trend bounce, which could be, here's this, from here up to like 95. So a counter trend bounce here would take this sector up to 95. This is going to be your Adobes. This is your Salesforces, Datadogs, things like that, CrowdStrike. Palantir is helping this ETF quite a bit right now. Palantir is one of those special situations which may be skewing this. I think Palantir is the heaviest weighted individual stock in this ETF. But with what's going on, even the big bounce, this is kind of like a defensive. It's defense. It's defense. So yeah, Northrop Grumman was the headline catcher, but Palantir is probably the one that everybody watches, at least at an individual asset class asset, which is having a great day. Last I checked, I can check it again. Deservedly so, based on the headlines. And yeah, continuing toward the highs, 146 off the lows of 125. This can go all the way up to 165 Palantir and still be technically in a downtrend. But that's a big bounce. It's a big tradable bounce. It's like 50% from the lows or 30% from the lows, which would take this ETF, if it drags a few names with it, into this 97 type area, which I think you can watch for. I think Palantir, being the heaviest weighted individual contributor to this index here, is probably going to give you the biggest tell. The other ticker is RSP, which is the equal weighted ETF for SPY, equal weighted SPY ETF. And this guy, this one has been like the saving grace for the market. This is measuring really the broadening sentiment of the market. It's not market cap weighted. It's steady. It's not in breakout mode by any means. Looks like it's a little bit down today. Opened down, getting bought up out of the gate pretty quickly. So, I mean, relative strength in RSP, you could say that decisively. This is that equal weight ETF, again, that tracks the S&P 500. But this chart's not showing, it's just slow and steady, relatively strong. I'm not seeing any major issues here. Channel's clean, intact. It was close to the lows of its kind of range last week, I think right around 201. Quickly reclaimed it and still kind of just chopping sideways. So I don't want to see this lose the 20-day simple, which is the white line on my chart. It's not, but that would be if it really starts trading below essentially this trend line and really 200 as a mark, as a clean mark line in the sand. This is the last breakout range to 200 and change. If it's trading below 200, okay, cool. Then this has at that point lost trend, but near-term trend, but that's it. And so I want to see this at least stay relatively strong for the rest of the indexes to continue to be relatively strong. And if IGV catches a bid, meaning like people start buying up that software sector is absolutely just decimated, and the equal weight ETF stays strong, those two pieces in combination for the month will be like definitively the watch, right? So if RSP continues to be relatively strong, IGV gets a bid, like, starts to bounce a little bit, people start buying the dip in the software sector, cool. We should see all-time highs and in both SPY and QQQ. But if not, if say IGV or the software sector starts to roll over and RSP gets a little weak, then we know we have a big dip coming, and we are due for one. So either way, it's more TBD and on watch. As a trader, I'm very reactionary, so I'm watching to make a reaction. For here now, there's no reaction to be made other than stay the course and maybe start to shift from a longer term perspective. I think the AI at risk names are probably still generally at risk, but again, the market will decide, not me. So with that said, I'm going to take a look really quick at some of your requests. So I'm going to scroll up here. What was the first one I said I would look at? Let me go all the way to the top. Well, okay. So what do you guys, we got MP Materials, Critical Metals, USAR. So this is the what we call the debasement trade, or if the dollar is going to pull back. I think it's fine. I would put FCX in this trade as well. But if you're doing something that's small market cap, like Critical Metals, CRML, you have to know this is extremely high beta. I like it. Your post earnings, you always want to check, make sure your earnings are behind you. The dollar is what you also want to watch for here. So like the dollar, things like that, this can go into a safety trade bucket. But yeah, this chart looks good. But I would say you have to be very cautious because it's extremely high beta, which means that you have to, how do I explain this? You know what? If you're in the apprenticeship and you sign up for the core skills module, we just released like another eight lessons in that series. We'll talk about exactly this, but you have to account for a strong, like a large enough stop loss, right? Because this moves so far, right? You'd have to have like 8 something stop loss on a trade like that. And the stock here is trading at almost $11. So the tough part here is that you have to be willing to go long this ticker in order to do this right, to hold through a 20% drawdown, which means that realistically, you can't have it sized too heavy right here. So while this chart looks great, especially from this morning, it looks good. I think it's the beginnings of a potential reversal. It's still early. And in order to take that correctly, you need to have a pretty wide stop on a ticker like this. So size matters. That's all. Size absolutely matters. In terms of MP, it's a little bit smaller or larger market cap, but again, very similar. This is better, but after a move like this, we are post earnings. This looks like very squeezy, this looks like wound very tight. How long has this been sideways? It is time for a move on MP Materials for sure. But we're a little early here. You might have your own idea, but again, on a ticker like this, you have to have a stop to trade this right, really like 55, and it's currently at 63. So that's a pretty wide stop loss after a move like this, 12, 13% on a larger market cap stock. It looks good. It looks really good. It looks like it's going to be in an active squeeze. If it's not already, it is technically an active squeeze. But again, trade location is super important. So on pullbacks, if this holds around 60 or just below 60, that's significantly better. But this looks good if you're a momentum trader. Just know that it could probably come back in. And, you know, if things like quickly de-escalate, a chart like this is going to turn south on you real fast. So it's going to be flashing a squeeze in one direction or the other. The direction, I'll just tell you right now, is not actually decided yet. So it looks interesting, but it's a high-risk trade location, decisively high-risk trade location, which I'm assuming the rest of these will be as well. Yeah, these are massive moves today. What are these things up today? I mean, 10% on the day, USAR. It's another extremely high beta. I mean, look at this. So these wouldn't really be, I guess depends on your time horizon, but either way, all of these you have to allocate, or you have to size for like a 20% drawdown before you close this trade, because that's when they would invalidate. But I don't know. So you guys are quiet. I don't know that game. But AVAV, this is a drone stock. I haven't looked at my Kratos. I saw this morning it was doing good. Yeah, this is wild. So they're instantly selling, except for Palantir. I hope I don't have to eat my words on that. A lot of these moves. This one, heavy resistance, 50-day, 20-day, 50-day, 200-day, and the 20-day SMA. When you have all these three stacked like that, yeah, it's going to be a magnet to get sucked into, and you'll have that reverse polarity if it gets out of it too. It would have gone either way. Could have done the same thing if it had gone up. But that is I don't know what's going on with this one. Either a contract has been announced and they just didn't get it, but this stock goes from, this is when I'm talking about high beta, like in a large fund, you can't own these in size. Up 20% in the pre-market to down 20% intraday. That's some wild shenanigans. Like if you're a day trader, cool. But oh man, I would be I'd be having a hard time owning the stock with that kind of momentum. Holy shit, which is $50. This is not a small dollar stock. That must be news. They must have lost some contract. I know these guys had a contract 7 minutes ago. Stock plummets, reversing an earlier 20% spike. U.S. Space Force announced it's putting, here it is, yeah. Downgrade came after U.S. Space Force announced that it's putting the satellite communications SCAR program back up for competition. There it is. So it's not theirs anymore. So they just lost a massive, ooh, that's rough. Company's core backlog appears to be in non-growing or contracting state over the next few quarters. That is a bad report. Holy shimoli, Raymond James. You know, I don't know if it's true or not. These analysts say lots of things. Sometimes they're right, sometimes they're wrong. Most times they talk a lot about topics that they're really not that familiar with and are assumed experts. Sorry, I'm ranting. But if you know, you know, and I don't know, so I'll leave that one alone. But yeah, that's wild. Yeah, that's what Miss Cleo said. I don't know. I might actually agree with this one. All right, so nobody. Oh, Construction Expo was Con Expo was Construction Expo. Oh, of course, Connie knows when Comic Con is. We'll have to go to Comic Con. I'm just scrolling through here to pull up some of these tickers. So Apple's got the new product announcement. I did not know. $260 even is a prior all-time high right here. This is a massive like inflection level on the stock. Oh, geez. This looks really tough too. I mean, as long as it's holding that general area, I'd say you could let this go down to like 255 and still be generally okay. This one looks kind of stuck, but this is not bearish to neutral. This is bullish to neutral, neutral to bullish on Apple regardless. Let's say if this does get through, we shall see. Your targets on something like this would be in this area, about 310. Let me just get a trade set up here. So over 266, this is a tradable bounce into 270s right here from here. But it's not a big trigger unless this is over 275. So that's a day trading target, something like that. Maybe like 24 to 48 hour kind of movement on this stock, and that would trigger over 266.5, go up to 270s, mid 270s on that for a quickie trade. But for a trend, this is going to have to be holding 274s. Maybe you can run it to 275s. And if it is holding 275, then we will see a larger move like this to the upside. But that's not going to happen until you can break through this general wall of resistance, which is right here. On a product release, that's possible. But I'll stay open-minded, because otherwise, if it's not done well, it's not taken well from the street, it's essentially below 260. You start to have this downside move into the 240, down to 230 area, 240, 230. So dip buys 240, 230. Momentum breakout buys over 275, holding in the middle. This is kind of choppy, day tradable, swing tradable for a very short period of time. But in this box right here, generally speaking, it's not going to hold much of a trend. So that's what I'll tell you right now. So that is a watch for sure. This kind of thing, Apple's been super resilient. I wouldn't typically say, hey, that's the kind of move that can happen overnight with Apple. But if the market's grasping for straws and just really, really trying to find something to hold on to, they might just all pile in. I've seen it happen before. Usually Apple's like best season is June into July. So we'll see. But yeah, I use Apple all the time. Fastly, this is the one I was looking for. Fastly. So this is a high beta, small market cap CDN, or content delivery. Holy shimoli. This bad boy, I've mentioned it a couple times. That is a massive move. This was literally $10 last time I was looking at it. I remember trading it literally recently around here, gave the whole thing back. Yeah, that's a massive earnings move. My God. So just for context, this stock used to be a big stock. And it's I don't think it's a small company. We're literally coming from $120. It's not so Fastly, what I will say is it's not a story stock. It's actually legitimately a real company with real revenue, in a tough spot. I don't know exactly what happened to them before, but yeah, this is, when I say CDN, that's like, you probably want to look it up, but it's content delivery network. So the edge of compute, if you will. So I think AI is a tailwind here. Even any streaming stuff is a tailwind here. It's probably all a heavy tailwind, and that's maybe what we're seeing here. I don't know that this is something you should, what the hell? So Street was expecting a loss. They posted a profit 2 quarters ago or a quarter ago. Again, Street was expecting another loss this quarter. They posted an even bigger profit. That's a shift in the business if this trading view data is real. And that's when you get this kind of a move. 2 quarters in a row, Street's expecting a loss, and 2 quarters in a row, you not only beat and show them a profit, but you show an even bigger profit the following quarter. I mean, there you have it. See if a gap to fill in fastly into the 22.5 area, but up to 24, you got to hold. This is strictly momentum. It's insanely high beta. Not a lot left on the table, but it's not a bad company. I'll tell you that. I used to work with them. I mean, it's a good company. This is even the small market cap. What's the market cap here? $3 billion. I probably shouldn't even be talking about that. I don't know how they got down to a $3 billion market cap either. It's probably unjustified. We'll move on a little bit. So Tesla, I think this 415, I actually been short Tesla, took a little bit profit this morning and not really closing this at all. So 415 is the big pivot. This is here. I might get some more time on my Tesla. I also have $400 cover calls for 2027 on this, which has helped considerably. But if it's not over 415, it's in trouble. And right now, yeah, this is a 200-day SMA. Doesn't matter to me so much if it's over or below this. I don't like this Tesla chart. From a technical perspective, does that mean it goes down? No, it doesn't. Like, you can have some headline happen on Tesla where, all of a sudden they're really in like the robotics. It's the robotics. It's kind of like your left field. Like you would own, and I own the stock, by the way. But like if all of a sudden Optimus plays a big part in whatever's going on with war and manufacturing, like that's your kind of flyer upside. Does that happen? I don't know. Also, SpaceX IPOing soon, I think, is supposed to IPO. Like the story here, like if Elon had Tesla buy significant share in SpaceX before the IPO, I mean, that would change this chart in its entirety. Here now, it's at very light support. This is not strong support, just to be totally clear. This is like weak support, extremely weak support. Strong support's way down here. It's in like the 320s, quite frankly. So as long as it's below 415, which is just barely below, maybe a little bit too early. It's too early to say that this is going to happen. It is too early to say that this is going to happen. It's not too early on Tesla to say that it's worth hedging. Like I just can't say that this is definitively happening. So on my Tesla equity is hedged. I don't love the chart, but I like the company enough to say, hey, look, I don't want to sign off entirely. This is like more investable. But I might be able to get it cheaper, lower, but it's too early to say that it's for sure going lower. It's just not showing me the strength that I want to see or need to see from it to say that it's for sure going higher either. So this one is a hold and hedge. This one more bearish to neutral for sure. But if you lose that 390, 389 area, I don't see a reason why it's not going to lose that right now. Even this is like a lower low than before. This is any high down here is just it's going to be lower. So, yeah, I think this has been my sentiment on Tesla for a minute. It's not really going to change. You're right, kind of like that center line. It can still come up and retest that 415. And it could even go up to 436, but this is not trend. This is chop. So to me, that unless we're like way over 450, I can't say that this is a trend, and it's too far away from strong support to say this is worth buying here if you didn't already own it a lot longer. So definitely a hold on Tesla. CoreWeave, what are you going to do on this one? I think that I didn't listen to the earnings report here on CoreWeave, but from what I heard, it was not great. They lost more than expected. I know it's Jensen's BFF here, but this chart don't look great either, man. So I mean, to me, you should retest the 65 lows Does it break that? We'll see. But from here to there, you got another $10 to go. This is not an uptrend. It's not viable from a technical perspective. From a fundamental perspective, do what you will. You don't invest in stocks based on technicals. Technicals to tell you when something's ready and when it's not ready. Right now, the technicals telling you it is not ready. So that's all I can give you from that perspective. I'm just going to check this really quick, see if I have, where's this coming from? Yeah. Unless this is over 111 in strength, I will tell you that the IPO price of 40 is in the cards. In the cards. And that's happening if this loses 60s. If this loses the 60s, it's going back to 40s. That is what it is. You can't even really say that this is like a... I just assume that everybody's thinking good things when they ask for tickers. I don't know if you are. I just assume that because people are naturally bullish. But this... this is a sell. I mean, this is, you could sell it higher. I mean, even if this could bounce to 95, it's not, like I said, it's got to get well over 111 for this to hold. Otherwise, you're very much at risk of just falling off a cliff here. This is a falling knife, man. I don't want anything to do with it. Yeah, I have no edge here. That's yesterday's lows or Friday's lows. I mean, 75.5. That's it. So you lose 75.5. Yeah, you're going to see, you're probably going to break 70s in short order this week. I mean, I don't know. It's not a good looking chart. It's probably a short setup, which I just gave you the triggers, 75.5. So sorry I didn't have better news for you on that one. Nebius. Yeah, so crwv probably screwed the pooch for a lot of these. Yeah, there you go. 108's resistance. It has been, remains. That's not going to change the story. If you've seen any of my streams that mention Nebius, go back to our channel and just, our crew's going to put some timestamps on these things later on. It's always been 108 so resistance. I'll make it red so everybody understands. That's resistance. This is support. Do I text my buddy? I'm telling you, I will not be texting my buddy at 79. I don't think that I want to deal with this at 79. I own the stock in very small size, but if I saw sub 60, I would probably be a little bit more interested. But at this point, before I even say that, just assuming, because it's so down in the dumper, just going to get a quick measurement. Yeah, actually, I have a lot of confluence here. So sub 60, which if the market doesn't like what's going on, that would be like September dip buys, not necessarily right now. I got a lot of confluence sub 60. So what I'll say here is that these levels, this to where it says Texament, this is 77.5. 77.5 actually is a 50% retracement. Let's just make this white for you guys. Here, from this totally different company, I get it, but from this like absolute lows to the most recent 52-week high of 41, 50% of that, meaning like if I took this whole box and I cut it right in half, boom, this is the halfway point. So technically speaking, that should hold. A 50% retracement, in all reality, it doesn't really, it is a technical level, but it doesn't give you any edge from a longer term perspective. It's pretty basic. this lower line down here is what I usually use. It's called the golden pocket, right? They call this between 50 and 618. They call this like a golden zone. And this 618 to 65 is something called a golden pocket, which is usually happens when you lose this 77 area, but or that 50%, you have pretty high probability that you're going to hit these lows. So I'm not going to touch this again unless I see like high 50s. It's not an active short either. This happens below 77.5, which we're far away from. So until then, this is, again, weak intermediate support up to 108. So near-term support, low 80s, high 70s, intermediate resistance, 108, give or take. And that's the box that she lives in until otherwise proven. But that is Nebius. And Ondas, I think these are the drones. I'm kind of curious to see what these guys are doing. So AVAV, headline risk, totally different story. That thing, I feel for any AVAV owners because that was an ugly looking stick. But it's not to say that the rest of the drone stocks are going to be any different. What you can do simply is just take a look at what was the overnight, what was the closing price Friday, the lows on Friday. If your stock this week is trading below Friday's lows, it's going to be rough. And it's not going to be AVAV rough because you don't have a headline catalyst. But regardless, it's at risk of doing something similar if the whole market's like, oh, we're going to sell the defensive trade because we're going to end this war tomorrow, which I don't think anybody's saying that's going to happen. So what I would say is, similar to when silver had its sell-off, I think silver pulled back to, we did this then, 60s. And I said at the time, I was like, look, even if it has a pullback like that, it's probably a buyable dip. It was a massive drawdown from like 110 to low 60s. What did I have? I mean, it's slightly below 50%. It was a buyable dip. I'll just say that it was a buyable dip. You reclaim 65. And to me, I was like, we're going to see 85 right away. And that's actually exactly what happened. Today, we're getting a little bit of sell-off. I think this goes back to a holding pattern. 85 is a bearish retracement, by the way. Let me change these colors for you so you see a little bit better. That's fine. Or, I'll put the fib percentages on there. This is a bearish retracement into this area. So it's the inverse because it's for the bears. But that is how the chart lines up. But this is your resistance area up to 92, realistically. But it started at 85. So from 65 to 85, I think that trade was in the cards ever since this happened. At this point, now complete. Expect some digestion, maybe some sideways action. But my point is that you're going to need to take something like this for Ondas and have a similar setup. So if you don't know how to do this, again, this will be in the apprenticeship. I'm not going to go super in depth. This is a little bit more advanced concept, but you're at resistance here. So you're going to have to wait for this to get back well over 1275. CDP, no one data, AMD. Yeah, AMD has not changed. Again, similar to how Apple has that 260 level as the prior all-time high, and similar to how Tesla has the 415 level. Tesla's 415 is like the strongest out there, but AMD's equivalent is 227 coming from this prior all-time high. So unlike Apple, it's not trading above the 227. This is more on the lines of Tesla, albeit they've been taking their sweet time to break down. I'm like, just rip the Band-Aid off already. if this loses the 185 area, it's in the 150s, but it's not losing it right now. So, oops, wrong spot. It's literally sitting on a bullish retracement. So same kind of concept. This is like your typical retracement. And so why I would say if this is losing 190 in strength, meaning like if it's just opening below 190, can't catch a bid over 190, you're very likely going to see like a 160 handle on this in short order after that. We're not there yet, but it's on the very near-term support, which happens to line up with the 200-day SMA. I don't really care about the 200-day SMA. Yes, it's still sloping upwards, but follow this chart, follow the rest of these. This 200-day SMA is about to flatten out. Your 20-day is definitively sloping down. Your 50-day is flat. If this goes any lower, what happens is your 50-day slopes down, and the slope is more of the directional piece. That's part of how you use these. Again, all in the apprenticeship, way more complex than I can explain in a couple minutes. But the combination of a downward sloping 20, if you in fact get a downward sloping 50 with a flattening 200-day, that's going to be the whoosh. And then if this stays below 190, then you then have a downward sloping 200, and this becomes real ugly. But until then, it hasn't happened, but it's important to know that that's what's at risk right now. Over 210, you're better. Over 227, you're really good. But oddly enough, even on this news spike right here, how these technicals do this, I have no idea. But to the penny, that pre-market move on whatever the macro headline was, I think it was with Meta buying a bunch of AMD chips, 227 to the penny. I mean, it's just what it is. But that is the main resistance area. I'm not saying sell this at all, by the way. This is like, what do you do? If you want to hedge, you hedge closer to this. You don't want to hedge in apprenticeship stuff. I'm getting wifey's calling. Actually. So I gotta hurry up before I get in trouble. Thoughts on Micron? I think, is it holding up? I saw SanDisk this morning. Look, that looks okay. I think there are two things. Like, power is everything to me from an investing perspective. This is GE. This stock, cornerstone of a portfolio. GE Vernova, also cornerstone of a portfolio. SanDisk, things like that, I think they've run their course. Corning is different. Corning is going up. I outlined this pullback. In my group, in the paid group. We do have an active trade on this. It is also an active investment. I think stuff like this, if you're not familiar, Corning is like my favorite stock right now, no matter how I slice it, because one, it benefits if the tariffs go up because it's an onshoring play. It benefits if the tariffs go down because their customers can sell more, which means they will buy more from them. Two, it is the data center play. It is AI trade. I mean, fiber optic or optical fiber. Fiber is a protocol, but it's like Ethernet. Ethernet is a protocol. Optical fiber is like the fastest transport in the data center. And it'll probably be replacing Ethernet as we go, quite frankly. So this is a lot more runway. I think that the market's still just in price discovery mode of being like caught off guard with Corning. And it's not just a data center play, right? So it's all of the above. It captures everything. It's kind of win-win-win, no matter what happens out there for somebody like Corning. And again, I know it's run a lot, but $135 billion market cap. It's not a small cap. I don't have to worry about that much. It is high beta, but Amphenol, which is the legacy leader in like transceivers and things like that. Just as a comparison, 167 billion. Had I seen this like a couple of days ago, it looks like they're rotating out of Amphenol into Corning just on the charts. This is the legacy leader, but it doesn't have things like Gorilla Glass and all the other stuff onshoring that I just talked about. Corning does. So for those reasons, I like this stock a lot. It's not that I don't like, WDC. This looks rough. SNDK. These are on edge. They're on edge. They're holding up. They're not broken. They're just barely holding. But comparatively, there's a big difference in these charts for sure. Appreciate that. So if you get something out of this stuff, definitely hit the like. And with earnings coming up, to your question, I think there might be a little profit taking coming into an earnings, and that is super typical. So to me, Micron, I would be more interested if I got very close to 300. 400 we know is kind of like that psychological pivot. If it loses that, it's going to be below the 20-day simple. Expect to pull back to the 50, which is not a whole lot. It's about halfway. So if I'm saying 300, I'd like it. 350, if it's really strong and people really want it, maybe they start picking it up at 350. Is a great spot. It's a tradable spot. If you do get an earning like dip ahead of the report from people just taking some basic like profit. AA is Alcoa. This is commodity trade. That is a good looking chart. I have not seen it in a long time. Holy shimoli. This is an OG stock. So kudos to Mags for even knowing what this is, because if you're not an OG, you might not know what this is. But this is not a small company. I see it 61.5. If you're over 61.5, you're in breakout territory. This could be one of those long-term trend adjustments, but you're up into this area in the 80s is clearly your resistance. But this is debasement. Mining, aluminium, alumina refining. Yeah, it's aluminium. Aluminium is the trade on Alcoa, aluminum for the US people, not ALB, ALB, Albemarle is lithium, Alcoa, aluminium. Hey, if you like Apple products and they're made out of aluminum, maybe there you have it. Yes. AVAV, we did discuss it. The contract that they're riding on really was put up for bid, SCAR contract by the government. That's why they're getting hit. So plummeting, reversing from up 20% to down 20% with a downgrade. Space Force announces that it's putting the Satellite Communications Augmentation SCAR program back up for competition, meaning it's available to be taken over. Microsoft, Palantir, no. Overweight, hold on. Oh, wait, forweight, Microsoft. Oh, you're talking Microsoft, then Palantir for IGV. Oh, that could be. I was like, you don't want to be overweight these names right now, unless you really are going to sell on a pop. But sorry. But yeah, from an IGV weighting, Microsoft first, then Palantir makes sense for sure. Let me scroll down towards the end because I gotta call mama back in a bit. Amazon. Though this is what I meant. It's totally sideways, man. This is go nowhere. I mean, prime for some condor selling for sure. 197 is the lowest. I think honestly 189 is where we go and retest that. So 189 on Amazon is the equivalent of like the 415 on Apple, the 260, the 415 on Tesla, the 260 on Apple. Any dip buyers, myself included, who had bought over here, they're just turning into sellers. Catch what I just said. Can it go up? Yeah, but this buy has turned into not being that great. And so what you're seeing to me is you're seeing this cohort of these two buyers, right? Here and here, turn into sellers here and here. And if this can't get back up over 215, which needs to look like that, that's it. In the meantime, it's more like de-risking. So like it could chop in this area. 200 is support near term, but until these people are done selling, which may not push this all the way down, may just put this in this little box for a while. Until these people are done selling, we won't get, this kind of a move until later. So I think best case scenario, you expect 45 days range bound trading on Amazon, but realistically sub 190 is the next buy spot if you like it. But again, back to kind of how we started, anything in this area from a long-term perspective, if you're thinking 3 years or longer, this is fine. This is fine for a nibble spot, and then just pray that you get lower prices later and then buy heavier later. That's how you would that's how I would operate right now for sure. But this is not a spot where I want to be oversized Amazon today. How to hedge Tesla? I mean, just the 350 puts or whatever it was, plus selling cover calls, higher delta calls with longer time. I think Amit closed Nebius. Let's do, speaking of our boy, let's just do Nvidia and we'll cap it off here. Yeah, see, so like, this is the crazy one. So Nvidia, whatever you want to call it, has a lot of gaps in the top, but coming into earnings, there was literally nothing that you could have done, that the market could have done to this chart that would have changed its direction. It could have taken it to $200 and it still would have been a short, or it could have taken it to $275 and it would have been a long, just to get back to the middle. I didn't think that it would do both, but in fact, that's what happened. But there we are. This remains near-term support in the low 170s. This remains upside resistance. The middle point is like 193 on this area for resistance, but 199 was the heaviest level of resistance that you had. There it is in all its glory. One more time. I mean, give it up for the Nvidia. Like literally the exact same situation. So like if I were to take a carbon copy of this earnings move and say, can I replicate it over here? I mean, the bottom's a little bit higher, but it's probably not too dissimilar moving forward. And so not a long, not a short, big bounce off the lows, but again, not compelling to make a move. I don't know why I would want Nvidia unless I just really was kind of at a loss for bigger ideas over a lot of the other options that might be coming. It's good. I like it. There's no reason not to like it or to love it long term. But I don't know. I just, at this level, $4.4 trillion market cap, there are stocks out there. I mean, even Palantir or Robinhood. I mean, I could pick up Robinhood at 70 and see it doubling in the next 24 to 36 months. I don't know, for Nvidia, we're talking about $9 trillion market cap. I mean, that's a lot. It's hard for me to wrap my brain around. Maybe I'm wrong here, but that's the struggle to me on this one. Otherwise, yeah, like that's near-term support. If it loses that, then longer support is down here. But this is, again, I mean, bearish to neutral, unfortunately. But I think a little bit more bearish. I mean, a little bit more neutral right here. It's not going anywhere. Steel, love it. Debasement trade. Energy, I mean, Bloom, I don't know. I'm just scanning through these. Energy is everything to me. If you think about it, like I would prefer the energy plays over the neoclouds. Like, what are the neoclouds going to be spending money on energy? If you like AMD, if you like Nvidia, energy has to work bigger than all of these. We just got Nvidia from here. So like it's a bigger catch-all. Yeah, sorry, I meant IGV. My bad. SoFi, Connie. This one doesn't have a space. It doesn't have a place in the theme of the market. So it's kind of like a redheaded stepchild right now, which so is Hood, by the way, right? Like my hoodie, SoFi. maybe these have bottomed, but they don't really have a place in the storyline of the market. Trend definitely has been lost here, but fintech typically does bottom first, and they're higher beta. I still think this like low 15 area is going to be probably 14's going to be your spot, but you're real close here. So this is what I'm talking about, like coming into this general vicinity, this prior top here, you basically just barely tapped it. So best case scenario, this actually starts to go sideways like this for a little bit, and then maybe you get a little pop like this, and then just before earnings, and then kind of a move. But earnings are end of May, so you got some time on here. Again, high beta, fintech, typically the first to bottom. We'll see, TBD. Just thinking of CrowdStrike. Earnings tonight. Yeah, got to be careful there. Yeah, I mean, the Nvidia price action, it's not funny. It's like, expect it. It's stable is what it is. It's stable. VG. Yeah, this one just reported earnings. So basically take today's high, 1190. My goodness. And if that breaks, then you're going higher. Right now, 1050 looks like a little bit of a level. The gap was already filled in the pre-market, it seems to be, at 980. So this chart is actually not horrible, but it's clearly extended. Yeah, I think if you get these big news dips, they're gonna be nice. Let me back out on VG, because you need a little bit more time when you got a small dollar stock on this. You're right into resistance. Let me see here. You can see I got a lot of lines on this bad boy. So you're on the 200-day SMA. If you do get through that, then this is that area that I was talking about. You could get up to 1380, but for now, you can wait for a little bit of dip. High beta name also, but just reported earnings. So I give you 1390 if you're over 12 from here. NEE, I love energy is everything. Energy is everything. I mean, if I get a natural disaster, act of God kind of dip on something like NextEra, I'm all about it. But like this chart is going to be a big one. So like, I know it's a utility. If you don't own utilities, I think it's dumb. Like, I think it's wild to be like, oh, okay, there's a potential large trade in NextEra to 120s. Like it's very possible, but dips down to 70s is the way to go here. It's a utility. It's weird. Like, what is this? Dominion Energy. Just look, this is crazy. Like this thing was $38, has doubled, right? Oxy, 30 something dollars here. Not even that long ago. Here, 34, almost doubled. I mean, it's a big deal. This is a weekly, just today, hitting the 200 week. Yes, this is what I'm talking about, is giving this whole thing back. But before today, this was all already in the charts. Chevron, most people don't get excited about something like Chevron. It's not a super exciting chart. But look at this. Regardless about today's price action, these things were ripe and ready to rumble. Like it's just insane. So these are massive breakouts that are brewing underneath 220, 230s. Longer term type trades. This is just today. Today, yeah, headline sensitive. You get a massive bounce. But watch these stocks as we move forward. They're this one not going lower than we talked about on Friday. They pulled out all that headline risk, maybe from a trading perspective. I think that was in the cards. But if you get a little bit lower and you're holding, let's say 180s, I mean, I'm just telling you, it's already in the charts. It's been in the charts. It's been sitting there waiting for a long time. This is not new stuff. So kind of wild. But I mean, just roll. If you're in Nokia, you just roll, like roll up and out, roll up and out, roll up and out. You're right at the highs here. You're in a breakout zone. I have no, you know what? Japan is great. I don't know if Nokia is like, I think it's legit Japanese equity, But EWJ has been in a bull market for a minute, and it might be down today. This is the index of like the Japanese index. This is good spot to have money right now. So this is their stock market. And yeah, it's down today, but this is a good setup regardless of what's going on. Like I want to be long Japanese equities. Not, Buffett was there a long time ago, but like I would just say it has been, remains in the charts that this whole index is going up and to the right. It's looking freaking amazing. You're like multi-decades long breakout, literally from the 2000s, 1996, just now starting, 25 years, 30 years, 30-year long consolidation. Do I think that that's going to go away tomorrow? Probably not. I'm not a fan of Nokia, but if you're interested in like global equities for Japan, go look up something called the Seven Samurai. And those are the best, those are the biggest performing, that's the Seven Samurai in Japan is like the equivalent of our Mag 7. So you can look that up. You guys. Yeah. Look at Toyota. I like Rivian, but I'll just say Toyota's got some massive competition coming for my Rivi. And I don't hate this one either at all. Like you don't have to one or the other. Like this is really good looking chart. But this is 80. I think this is ADR. Anyways, look it up. Seven Samurai in Japan. There's this company called Fast Retailing, which is Uniqlo. It always cracks me up. You go look at that chart and you're like, okay, Nokia is Finland. It's the Seven Samurai, this company called Uniqlo, which is Fast Retailing in Japan. It's the Lulu, but it's like you look at Lulu and you look at Uniqlo and you're like, oh my God, why are we even messing around with Lulu? Like their charts are totally different. But yeah, if Nokia is not Japanese, my bad. You're right. But it made me think of this. But there you go. If you didn't know, it's a full-blown bull market happening over there. Yeah. I don't think I want to do with this one, but technically it's cool. But the Japanese index looking really good. So, tangent. Anyways, yeah, Uniqlo, like it's go look it up. I don't think they even have an ADR, but you can search out the chart. It's crazy. No, it's Japanese. Fast retail. It's got a really, you on TSE, here, I'll share it one more time just so you guys see it. There. Weekly. I mean, what are we talking about Lulu for? So funny. English. I can't get through it. Anyways, that's it for today. Love you guys. I got to call mama back. And, oh, there you go. FRCOI. There you go. Yeah. They're still trying to get tickers in. All right. Cool. Adios. I think that I'm going to hop in with our boy tomorrow, but we shall see. And again, check the comments in the description. We dropped that link for the webinar. First come, first serve kind of thing on that. Again, we will be, I'll drop this one more time. We will be capped on this guy, and I have not posted it yet. So grab it if you can. This is going to be on Friday after the market. So he said yes. I love it when you guys give me the news. You guys let me know what my schedule is going to be this week. But yeah, that one. And again, if you're not in the School of Gains, again, book this call. We'll at least get you like the first 7 courses to test it out for free. If you talk to the crew, but yeah, if you like it from there, then call us back and be like, yeah, I want to join. There's a lot of stuff that you get other than classes. It's not just classes. There's like a ton of stuff here in the apprenticeship, but that's different than this webinar. Webinar is free. And I will see you guys out there. Adios. On to the next one. Peace. This is it. The beginning. Consider this the first day of your trading journey. Everything in this course is tested, proven, and absolutely worth your time. Our mission has always been to show you the strategies and the edges that professional traders use and to teach you how to use them yourself. Because when you finish, you won't just know more, you will be more.